Hi, I'm Chris Bober with Land Pros Realty and Cabela's Trophy Properties, and I'm going to show you a real-life example of how a 1031 exchange could benefit you. You can read the specifics in the article below, but in this example, you bought a property 10 years ago. You called Chris Bober at Land Pros. I sold it for $1.2 million. Now you think you have 700 grand you're going to put in your pocket and you're going to walk away. Well, it's not exactly that easy because Uncle Sam is going to want to take a chunk of that in both state and federal capital gains taxes. You figure out your net adjusted basis here. You take out the improvements and the depreciation. You get $400,000. The cost, the sale price of 1.2 minus your cost of sale, any closing costs, agent fees, and then your net adjusted basis. Your capital gain on this property is $720,000. That's your profit. That's a pretty nice little deal there. However, you're not going to be able to just keep that because you're going to have to pay the recapture rate of 25% of your depreciated assets, which is 37 grand. You're going to have to pay federal capital gains of 50, well, let's assume 15%. It's even as high as 20% sometimes. And you also have to pay the state capital gains tax. In Nebraska, that's around 7%. So right there, if you would go through a non-exchange, you have a $173,000 check that you have to write Uncle Sam after you sell the property. So to figure out your net equity, you still got to pay off your closing costs, your loan, and minus the taxes, you only made about $646,000. Not bad. However, in this situation, I'll show you the purchasing power of a sale versus a 1031 exchange. So if you have the $646,000, you can borrow, put that down as a down payment on another farm or another piece of property, and you can borrow probably up to $2.5 million. That's a nice piece of leverage right there. But if you do a 1031 exchange, you don't have to pay those taxes, and you're deferring those till later. So you really have $820,000 to invest, and using the power of leverage at 25%, you can get almost $3.3 million. So $693,000 and $600 is what you're going to get pretty much free and allowed to borrow against and put down on another piece of property, which this is free money. The IRS is giving you this opportunity, deferring your taxes, and no matter what you do, you can do a lot of different things. You can put it into multiple properties. You can put it to your kids. If you have 3 kids and you want to give them each a farm, instead of letting them try to chop up the family farm after you pass away, you could put it into different vehicles. Maybe a depreciated property, you want to sell it high as farmland is now, put it into some pasture land, some housing, a Delaware statutory trust, which is an investment vehicle we'll talk about in the next article. But it's a great tool that you can use. And as a land professional, as an accredited land consultant candidate, as someone who's an expert at these kind of transactions, I have knowledge about this. I'm not the expert, but I am definitely knowledgeable. I could put you in touch with qualified intermediaries who are the professionals who actually transact this business. So I have professional relations with them all over the Midwest. So if you're looking to buy or sell your land, I don't want the tax situation to deter you from doing that, especially while this land is so high right now.